All right, so welcome to today's class, and in today's class we're going to be talking about breaker blocks. Now, when you get to see price movement, all right, let me give you an illustration. Now, there is something called displacement in price. Now, displacement is when you see price moving with very high volatility. For instance, let's say we have, okay, give me a minute to change the color of this. Let's say we have price moving this way, yeah? Moving this way, we have the lower low, blah blah blah. Price is just moving, all right, and then price tends to form something like this. Yeah, now this movement, okay, this expansion, this displacement is quite a large one. Okay, in most cases now you get to see that this could just be two candles or even one candle sometimes that can get to give you a very crazy move. All right, now when you get to trade this, of course you know that, all right, now when you're trading this, you want to see price retrace to wherever you want price to retrace to, all right, but now when trading something like this, you of course should not expect that price will come back to the other block that is up here, because the expansion is too much, the displacement is too much. There is no real life example I can really give. Just understand it. All right. Now the displacement is quite a lot. So in most cases, all right, in a lot of in a lot of times, you would not see price going back to the other block, because of course you might be wanting to see price maybe go back to um you might be expecting to see price maybe go back to possibly another block here or your fair value gap. Hey, the expansion is too much. The expansion is crazy. You would most likely not see price go back up to your other block, right? Because for price to fill, it's going to take a lot of orders for the smart money or the ICT to be able to, push up to your other block here. Yes, it can happen few times, but most of the time it's not going to happen. Now, what do you do, or how do you get to trade off the retracement? Now, in most times, that is where your whole idea of what's it called, of the breaker block comes in play. Now, what is the breaker block? You often find out that there is always another block here. All right. Now, that other block, the initial, what is it called? The initial movement that you might have expected, or the initial movement that was maybe supposed to happen, was that as price has broken above this previous high, you want to see price come back to what? To this uptrend here, right? Come back to this other block and then maybe buy from there, right? Am I right?
Yes, yes.
But then you get to see that price just breaks past that other block as if nothing is even there. Price just breaks past the other block, and in a very crazy and aggressive manner. Now, for price to come back, it's going to use that other block. That is what you get to refer to as your breaker block. Okay, on the return of price there, all right, at this region, the other block that price ignored here is what is going to expect here, and that is what you refer to as your breaker block. Let's dive into the real chart and look at what I'm trying to explain right here. I saw this on an index earlier. That should be euro USD on the 1 hour time frame. Let me look for that setup. Very good, very good. I've seen it already. All right, now let me take this away for now. All right, now sorry, let me just use a very neat chart. I have lots of annotations on this one already. So let me use a neat chart. Let me use forex.com. All right, perfect. Sorry. Now, okay, take a good look at what price actually did here. Now we had what? We had the whole uptrend, we had the whole structure doing its thing. Higher highs, higher low, okay, higher high, higher low, blah, 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 and so onward and so forth, yeah? And then look at what price did, okay? Now, this is another block. This right here is another block. This right here is another block. So what you would have expected was that price was going to do what? what you'll have expected was that price was going to, come down here. Price is going to come down to this other block, then buy from here, right? But then, for some reasons, okay, of course, if you check the higher time frame, you're going to see the reason why, okay, the reason why price did not really continue the uptrend, all right? Now,
Yes.
you get to see that now price, instead of expecting the other block, which maybe you expected or which maybe was supposed to happen, you get to see that price breaks below. Now, this is crazy.
Mhm.
This is what you refer to as displacement. You see these two huge candlesticks.
Yeah.
This is displacement. This is price moving with a very huge momentum. Same thing we have here. This is displacement. This is displacement. All right. This move, whenever you see price moving aggressively, that is displacement. Take a good look at this move here. This is displacement. Yeah. Now, it occurred here. All right. Price moved aggressively, breaking past the other block as if nothing is ever there. Now, if you expected, or if you let us just watch and see how far price got. You see, price is still selling. Price is still selling. Okay, then price started reversing back up. Now, if you expect price, okay, to buy up to this maybe other block of fair value gap here, of course you're going to be joking, because this movement is way too much. In few cases, you might actually see price go back to that other block, yeah, few times. But hey, 80 to 90% of the time, price will not have the energy to go back up there to mitigate the other block. So what is price going to make use of in this case? Price is going to make use of what? A breaker block. Price is going to make use of a breaker block. Now let me show you how I trade breaker blocks. If I have a very let's say I have a small breaker block with a very comfortable, what is it called? That will give me a comfortable risk to reward. I can just put my entry at the beginning of the breaker block, and my stop loss will be above the breaker block, yeah, and then my take profit will be wherever it's going to be. All right. Now, if I have a small breaker block, I'm going to use that. But now in this case, this breaker block is too big. All right, it's too large. Now, your second option could be that you can use your Fibonacci retracement, okay, to mark the 0.5 level of what, of the breaker block, and sell from the 0.5 level. All right. Or you can still, all right, wait for price to get to that breaker block. Okay, once price gets to that breaker block, then you look for internal entry opportunities, like I've always taught you guys. The market structure shifts, maybe liquidity grabs, anything at all. All right, so those are three ways you can trade breaker blocks. So now let us look at this one, for example. Let's see, did we get mitigated at a 0.5 level? It looks like we did not get mitigated at a 0.5 level. Yeah. Now, but price actually came to the other block. So if you used the first entry model I gave, which is putting your entry at the opening of the breaker block, you'll have been triggered. All right. But personally, I wouldn't do that. I would rather just wait to see internal structure moves. Now, did we get those internal structure moves? Perfecto, we did get them. All right. Now, that internal structure move, let me show you. Let me zoom in, sorry. Now we have our market structure sheet right here. We have previous high taking. We have a very clear shift right here. All right. Now having this clear shift right here, price still went up to do what? To form internal liquidity. You can maybe say equal highs, whatever, but then price did form internal liquidity. Okay. Now we're going to be selling from a fair value gap as always, or maybe another block. All right. Now in this case, we have a very sweet fair value gap. We have a fair value gap right here. So our entry will be on the fair value gap here. Our stop loss will be above the high as always. You guys know this already. And then our take profits we're going to be targeting external range liquidity, external range liquidity, external range liquidity. Let me just, we're going to be targeting external range liquidity. In this case, we can target somewhere like here, all right? But I'm going to like to be conservative and I'm not going to put my take profit here. And then, of course, you see how price mitigated this. Now, on this particular day, I got the entry on, what's it called? On GU and not really EU, okay? But then this is how you get to apply breaker blocks. This is how you get to apply breaker blocks. Now, another breaker block happened. Let me show you. Let me show you another breaker block that happened, all right? Let me take away this because I want us to see price clearly. Let us zoom in. Now, this whole movement right here again, okay? This whole movement again is displacement. Is what is displacement? Is price moving with very, very high volatility, okay? Let's check M15 for something more specific, okay? Or let's see M3. Now, perfecto, we've gotten what? A breaker block right here. Now, this breaker block is what? Together with this high. So with this whole massive displacement, whatever, we can trade our breaker block. Now, this is M3. The breaker block is not really so big, it's just small. So I can afford to put my entry at the opening of the breaker block. I might take profits, let's see. Let's say this low or wherever the retracement starts from. All right, we're going to target that low. Now let's see what happens here. We get mitigated. Not yet. Okay, we've got it mitigated, and then boom, we can see smashed. All right, but then somebody will have been waiting for one bushman will have been waiting for price to get to his other block inducement or whatever. But then whenever you see large expansions like this, price will most likely not retrace back to your other block. It's just going to look for maybe a fair value gap close by or a breaker block close by. Let us check gold or Nasdaq. Nasdaq does this a lot too. Let's check gold. All right, let us check gold. Gold left me today. Gold did not mitigate my entry today. All right, so perfect. Let me explain on 1 hour time frame. Okay, I'm trying to look for a very clear breaker block entry. Right. Looking for something a little more clear. Let's check Nasdaq. We're on Nasdaq. Looking for something a little more specific on Nasdaq here. Now on Nasdaq, all right, this works crazily on Nasdaq. You see, I used it right here. I used it right here. Okay. Now this is a breaker block entry. You can see I entered right at this point, okay, at the opening of the breaker block. I mean, was it the close of the breaker block? We use a bullish candlestick, so we entered at the close of the breaker block and then stop loss below it. Now, how was that a breaker block? Let me see if you have a clearer view on the 1 hour time frame. All right, we have a more clearer view on 1 hour time frame. Yeah. Now, price broke above this. Look at the huge momentum. Like this is 1 hour. This is a 1 hour time frame. Look at the crazy displacement, the crazy volatility. Now, you wouldn't want to expect price to come and mitigate this other block down here. Yes, price might actually do that, but it's gonna take a lot. Like it's not something that will happen 100% of the time. Just know that that is how you trade it. Whenever you see huge displacement, you and look out for a breaker block, okay, rather than expecting price to maybe mitigate your what's it called, your other block or whatever. You must just know how to apply all these things. You must just know how to apply this whole ideology, okay? And then in confirmation to that, we still had what? Liquidity equal lows. So it verified this whole other block, this whole breaker block thing. Massive, okay, you can see how we got triggered. Massive displacement over here. We had the breaker block right here. All right. This was a very small breaker block. So I had no business or I had no need to refine it on the 3 minutes time frame. I was comfortable with the risk to reward. You can see this is five one risking one to get five. All right. This is 5 or 4.98 RR. All right. So I'm going to look for one more examples, and then of course you will have to go to your chart and do the assignment. And then it has to be in what? It has to be in line with your bias. Okay, it has to be in line with your bias. You don't just go looking for things. No, it has to be in line with your bias. This is another entry technique. All right, this is another entry technique. This is another entry technique. If I don't get to see anyone close by, yeah, you're gonna go do the assignment on your own. Let's see. Okay, let's check. Let's check XAU again. I'm trying to find another explanation. Just one more explanation that will be good. Okay, yeah, something just crossed my mind. All right. Now, when you are trading this concept, all right. Now it could actually happen in any way. You could have structure form this way. Okay, this is one. All right. This is one. You could have another this way. Now the difference right here is that this the previous high in this particular example, previous high was taken out here. This example, previous high was taken out, all right? But then in this example, previous high was not taken out. Instead, we had a shift in market structure. So anyone could occur. Just know that whenever you have a very huge displacement, that is what is it called? That is what validates you using breaker block. You must have a huge displacement. All right. You must have massive displacement. Okay, before you want to go about using other blocks. Using breaker block, sorry. All right. So it does not really matter if you had buy side or sell side liquidity taking. But then I would rather love to see mine taking anyway, but it does not really matter. All right. What really matters is that you have huge displacement that validates the reason that, okay, now price does not really have to expect your other block. You can just go about using the breaker block, the closest. All right. So, do you have any question, Chimi? Hello, do you have any question?
Hey, yeah, I'm with you.
You have a question? You can
Yeah, my,
go on, ask.
the the breaker blocks, yeah, the ones you consider like the displacements that you consider valid as breaker blocks, it has to be counter trend. Like it has to be, do they have to be from, say, a change in either a market structure shift or like a break of structure,
I don't understand your question.
or like I'm like, because you can see huge displacements at other places in the chart now, like
Yes,
huge
yes, yes.
moves down, but they are along aligning with the trend. But the structure you drew was seemingly counter trend. Like
The last one I just did.
the market was,
The last one I just did.
yeah, the like the annotation you made with the line chart.
Now the annotation I made. What the only difference, okay, with the annotations is that one one first of all, okay, let's say we had an uptrend this way, okay. Now the only difference was that one took out buy side liquidity, okay, before
Okay.
having the displacement. In this case, you can look for a breaker block. Now this is the first
Okay.
example. Now the second
Yeah.
scenario was that it was an uptrend, okay, an uptrend, but then price did not take out buy side. All right, instead it formed a lower
Mm.
high and then it pushed down.
Okay.
Get so from this point you can still get from your breaker block and then you're good. You understand?
Okay. Yeah. So but my point is, it's always coming from an uptrend, or like
No, no, no.
it's
It
always
could
like
be it could be a downtrend structure. It could be a downtrend structure. Do you understand? It could
yeah,
be
yeah.
a
I get this. I'm just saying it's always counter trend. It's not like what you
ah
consider that
no, 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 no. It's not always counter trend. Um sometimes it could be a continuation signal also, in the sense that you could have price doing this, all right, doing this.
Mm,
Let's say for example, okay,
yeah.
then you could have price do this, and then boom, you have a very huge displacement over here. All right. Now, whenever you
Okay.
have something like this, okay, or let's assume you have something like this, usually you might have your POI, maybe another block, fair value gap, something, maybe somewhere around here. All right.
Mm,
Now, price in most cases, whenever you have this kind of huge displacement, price in most cases will not reach up for your other block. Instead, price will use a breaker block here.
mm,
You
okay.
understand? You understand?
Yeah.
So it must not be counter trend. It must not be a reversal. It could still be continuation.
Okay. Okay. That's what I wanted to clarify.
Any more questions?
No, not
All right.
at the
All right.
moment.
All right. That'll be good then. Just go to your chats and do the assignment and do the homework. And let me know,
All right
please.
then.
Okay. So once you do, you send to me so I can actually see.
Will do.
All right. That'll
Thank
be
you.
all for now. Have an amazing night. King and I'm signing out.
You too. Cheers.